What's going on, traders? Hey guys, hope everybody's having a great summer. I haven't done a video in a while because I was traveling, COVID, etc. Went through 5 or 6 states. Kind of took a long summer vacation. Spent some time on a lake in Tennessee, and then went to Chicago. Went back to Tennessee, but I'm here in the city now in Chicago and getting set up. So I'm excited about it. And so far, so good. But been trading, just haven't really been set up with the screens to do videos, etc. So anyway, we'll start to amp all this up as usual. And I got some new things in the pipe too. We'll be doing like analysis. Might change up the chat room also, and maybe a live stream. But I really want to hit on kind of global macro where we are at. I haven't done a top down, as we call it, in a while. And I'll do that if some of you guys come and check out the chat and the live room via the Cycle Edge, which I'll go over that later. So I just want to hit on real quick where I see the opportunity, what we're kind of looking forward to change things up. Like, July, they call it the summer doldrums on all the trading desks. Typically it's not volatile. You would have thought with everything going on in 2020 that we would have seen more vol, but it has been the case. So that could easily change. A lot of times the market will kind of front run September, October, November quarter and start moving and picking up vol in August. It's kind of what I'm thinking. But anyway, we'll look at some levels and we'll know when there's risk on the downside as far as equities, and then the vol starts to pick up. But let's just start with the dollar real quick. So the key point here about the dollar is that you have two trends going on right now. You have the bulls and the long-term trend, which has been in place since 2014, and that's right here. Get my pen ready to go. Okay, this was our call here. This was one of our first big calls. Global macro, dollar is going to break out, and this was just a massive run. All right, it was mostly the euro breaking down. But then this was another period kind of similar to what we've had right now. Notice kind of this measured move right here. And what this move did was it brought out all the bears, and they were talking about the dollar's done and blah, 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 it's going to go down. But see, when you put it in the context of this entire move, you didn't even retrace half of that move. All right, so the market actually held right where it should have and then went to a new high. So this is all typical of a bull market. Now in here, once you break the bands, there's always a chance you go back to the 200. There was a chance you were going to get that here also. So there's ways to trade that when you get that type of, when you pull back from here. I mean, there's some good moves on the long side where you could have been short euros, but when you break here, you do have to play defense if you're a dollar bull. All right. And then we chopped around into the end of 2017. And this was another move down where obviously the dollar bears were in control, but you held pi and everything is still long-term this way. So if you're going to change this long-term dollar trend, you have to take out these lows. You got to get traction below our pi line on the weekly, but really you need to break this low. Otherwise you're still heading this way. So that's the very long term. Now that long-term picture isn't always where you need to be and where the opportunity lies. So when you go to the daily, it's a different story. We had this fake out here, made a low, went to a new high. I still think there's a chance that we'll do something similar, chop around, you get the risk off move, dollar can go a lot higher again. But tactically, I mean, when we broke here, this was plenty of bearishness for the dollar, and the euro chart is the same thing. So I haven't added the euro shorts in a long time. kind of play the euro long against a couple other pairs. And FX has just been really slow the last month. So I think maybe we have to test here, test a little bit lower. It's going to depend on what these riskier assets do. All right. So that's a dollar. You know, a dollar is obviously key for a lot of markets. Let me clear this up. What do you guys want to do next? Let's just talk equities. Maybe I'll go to 2 screens. Okay, so I think, you know, it's fair to say that the best place to be in global macro has been the Nasdaq if you've been long. And I played it long. There's too much going on. Let me change this. Still have a lot of lines on this chart. It's just been a one-way street, though. I mean, this has just been a phenomenal uptrend, and there's no reason to get bearish until we start to break the lower lows. So what I was talking to our group in the prop room today is you look at the Russell, it's a lot different picture, a much different picture. And we continue. I like selling when you want to be bearish or you get high within these cycles. You don't need to go and put yourself in front of the Nasdaq train. You can sell the Russell. And when you actually start to look at what they call a pairs trade, and I'm going to do a webinar on this next week. I'll do some videos and I'll give everybody a heads up beforehand. But the way we've been trading day trade in the prop program, as well as the longer term opportunity on some of these pairs trades, just look at this chart here going back. This is a monthly chart. If you're long Nasdaq, short the Russell. This spread is just think or swim. I have an Amazon and Baba over here. That's another one I'm going to talk about on the webinar. Oh, I don't know what's up with them. All right, anyway. But you can see the chart's completely different. We got above pi a long time ago here on the daily on Nasdaq. We're still below pi on the daily on the Russell. So that's the difference between the economy. I think the market's priced it in. And so you guys got to remember there's the economy and then there's the stock market. There's companies, then the story, and then there's the actual shares that are available and the capital that has to compete for those shares or has to decide where to flow to. And the capital is always going to flow just like water flows to the lowest point. It's going to flow to where it's treated the best and where it thinks it has the most opportunity. And that's clearly not the small companies that have been struggling and that have solvency risk and everything that makes perfect sense from an economic fundamental perspective is why the Russell should struggle. So I sold a couple, was short a couple lots coming in. I sold another one here this morning or into the close because we got below pi here. I didn't sell up here yesterday. I came out of some longs like Amazon and couple other names I have. But this closed today. I wanted to be a little bit more short because I did just buy one lot back to keep my pairs trade on. So I'm long 1 Nasdaq, short 3 Russell. And then we have our other shorts that we like too. So I balanced that out. But just coming in here and selling 4-hour and hourly cycles on the Russell has been great from a course perspective. But you also just need to keep in mind, like, you got to figure out, do I want to be, the most I'm going to be short is 2 contracts or 3 contracts or 4 contracts. You don't want to just short every higher high in these uptrends. You have to wait for lower lows. That's when you're going to know when the market's breaking. It's not, oh, I think this, I feel this. Oh, the market should do this, the market should do that. Oh, this time, last time. No. You don't break trend until you take these lows out. That's when you're going to get your risk off move. every time we've, yeah, you can make some sales in here, and we have, but the key is when you're going contrarian, because this is the uptrend, so you're going contrarian, you're fading this, looking to go back this way. You can't be too heavy too early. You're gonna lose a fortune in the move up. You gotta fade it a little bit, but then you can only add on the lower lows. That's so key. And at the same time, guys, you can't just get on the one side of the market and only be short. This, all the opportunity in since March and April has been on the long side. That's where you're going to make money. So you need to have longs and shorts. You got to size them right, and you can be more aggressive when you're in the uptrend. And then if this were to break down, yeah, you'll give some money back, but then you're going to pick up gains on your shorts. All right, and then there's other things to do on like vol. I really liked the VIX yesterday. Pretty much nailed it. I put out 2 signals on the VIX the last 2 days. Right here at the 200. It's obviously the opposite of S&P, but it trades a little bit different because of the roll. If you look at front month VIX futures, you know, we're starting to turn the corner. So this has been a slow process. And again, this is the structure. Nothing but higher lows. You couldn't break the 8. Here was a nice higher low bounce, still have high vol. But once you start making lower highs, lower high, this was a lower high even, but this lower high, this lower high. And then when you crack this low here, now you're clearly making lower highs and lower lows. And that's just an opportunity to be a seller of vol. And we shouldn't expect these big down moves. And again, that's because the S&P needs to make a lower low. Now this was interesting too. This was this big fat bullish candle, or what we call a real money candle. And then you pull back inside of that zone. Most likely we'll get a higher low in here. And I think the odds are that we're going to get another move back this way. So the way to play that, there's a couple of ways. I mean, we were buying puts on UVXY. When you get really overbought, like up here, is this ETF absolutely just is designed to go nowhere but down longer term. So you could have bought all the puts you wanted up here, 48.50, traded it as low as 30. That gets cut in half. Usually we're due for a move back the other way. So I like buying the VIX calls, and then there's a couple times we shorted VIX futures in here on this down move. Put my trades back on, see if they actually show up. So just as this account, but you know, there's a couple times to short, and so we'll see. I was buying the VIX in case I get, you know, this VIX futures will go against me, but that's okay. I mean, that's why I sold more Russell. I'll profit from a move up in the VIX if we trade into 31, 32, 33, 34, and then I'll probably sell another lot in futures short vol and then see how we trade. And it's kind of always a balance back and forth between trading the longs, adding to the Amazons on pullbacks, taking them off yesterday, buying the VIX yesterday, the day before, in anticipation of covering VIX futures if we went lower, and that those VIX calls didn't play out. Anyway, guys, that's kind of what we do. That's what I'm thinking longer term. So this vol chart is telling me that maybe we're due for, we're definitely due for a pullback. And then when we look at the hourly right here, we kind of broke. Let's see if we can, if you take this low out, then there's room to trade back to 3106, 3100. I wouldn't be surprised if a lot of the options traders, gamma and vol guys care about 3100, that strike. And if you get through there, then there's room to go back to 3000. But you shouldn't, there's no reason to be making calls that the market's topping here until we start to crack these lows. Every time we've had a 2 to 3, 4 day pullback, it's just met by a wave of buying. And then just like this last week, we're right back up for 6 days. But definitely yesterday, today was a good place to come out of longs. And then, like I said, I added to the Russell short. Yeah, so guys, I'm doing a webinar next week. If you guys go to jenkinscm.com, you can start to sign up for that. I'll have some more reminders. This is our free chat room. You click here, professional user interface. This is the best way to connect with us. And then, just if you got questions or you're new, we have an ebook over here. This is so these are all the courses that we've offered. I've done one-on-one coaching over the years. I'm still open to doing that, depending on how much time you have and for what price and your experience level. But most of the coaching we do is in a group setting. And now I do most of the coaching set aside for the prop team. So that's our proprietary trading group. We trade together every day. It looks like this. I partner with a firm out of Chicago. They've funded the most amount of retail traders I know globally that actually follow through and fund guys. And you go through a combine, but then you get to help you work through to get a funded account. Trade it, it's 150,000 buying power, which is plenty when you're trading futures. So that's kind of what we do on the prop side. It's a way to get some of you guys funded. Even if you don't want to be funded, you can still come in and trade every day with me. We talk big picture, we talk swing trades, we talk day trading. And the best way to get involved on that is, so I have these courses listed. This is our options course. It's the entire model, a lot of the strategies and spreads we like to use. That's 2,500. This is the directional model that we built from my 10 years on the institutional fixed income desk. This is all the directional stuff we use with hedge funds and big banks, $2,000, high cycle course, but Forex course. All that is a comprehensive, just the courses, guys, $5,700. And I'm still offering all the courses and the options membership, the options group, the program, and the prop program, in addition to the cycle edge, which is just our signals and analysis in our private room. But you get the cycle edge, the entire options program, and then the prop program. So it's basically trade with me every day live. Click right here, guys. All the courses is $5,700. The prop program is probably another $5,000 worth of my time for an entire year. It's $24.99. I put this together when the markets collapsed because everybody's losing jobs, stuck inside. People want to learn how to trade. This is the best way I can help get people educated, get them equipped, get them on the right teams. I've got you covered if it's options, Forex. Futures allows us to trade pretty much anything. Obviously, the model you can apply to ETFs and stocks and crypto. But take advantage of that, guys. It's still going on. I think that's pretty much it. If you want to review what I did today, we can. I day trading in the prop team. This is right off the open. I went short, covered, and then I dragged a short. This was actually a little bit of a mistake. I kind of looked back at it. I probably should have covered a piece right here. I'll show you on the other charts, a little bit easier to see. Probably should have took half off, but I ended up stopping right on the high. I knew it was close to the high. This was our pie line was right up here. But then I chipped away back on the short side, made some money back. But next, so I was down on the day on the Russell, but the Nasdaq is kind of where the juice was. And so right out the gates on the Nasdaq, all we did was there was this real money candle on the way up. Let me clear this up. Real money candle on the way up here. First initial push shows you the power. And then as we pulled back inside that bar, I bought, and then I bought a second lot. And this was actually, there were the bands right here on the 1 minute and 5 minute was showing you the uptrend. So this is a good spot to be buying. Made some money there initially, bought again. Oh, then we sold into the prior high, which was yesterday's high, I think. Just made a small scalp cover there, pretty much covered the low of that move. I tried a long here and then I actually stopped, went short, covered. I think I played another short there. Those are just a couple scalps late in the day. So not a huge day. I mean, the vol has been a little bit lower. But again, I'm trying to favor being long the Nasdaq. I'll just show you what the chart looked like so you can kind of understand the process. Some of you guys are trying to learn. So over here, let's just do the Nasdaq. There's not a lot of thinking. There's not a lot of guessing. There's not trying to figure out what CNBC is, guys. It's just we just stick to our model. So this is an uptrend. Bands are you're making higher lows and higher highs. You get this big push. It's kind of a lot of distance to chase up into that high. So I waited for a pullback inside of that candle, bought, and then bought the low right there. Boom, and you got a nice bounce. And you could have stayed with this and just held a piece. But I kind of like to come in. If I was actually long S&Ps for that same move, so S&Ps were going up. So I'll come in here and scalp long, get out, scalp long, get out. Actually, we shorted that, covered. The reason I shorted was just because we were back into this high. So sold it, covered, and then you actually went to a new high. It was a good cover. Kind of an outside day. I mean, it opened up stronger and then reverse couldn't hold it. We got to see if we can hold halfway of yesterday's candle. And then if we take out yesterday's low, that'll be the first trigger point that you can have a deeper pullback on the Nasdaq. So keep that in mind for tomorrow. All right, guys. Hope that helps. It's good to be back, kind of more involved, and we'll get you guys going. Some of you on the team. Feel free to ask me any questions. Just come into that chat room. That's the best way to do it. JenkinsCM.com. I'll put the link to this page also if you guys want to do the deal. And yeah, hopefully we'll see some of you in the room the next few days.